Now, if you've been paying close attention, you've probably noticed that we pretty much talk about Gary Gensler every day. I'm afraid it's not for the best reasons. Someone who's been looking in from outside might be like, why are these crypto investors harassing the regulators? But, we are not harassing him for anything that he did not do. To start with, for months, Gary Gensler claimed to have authority over crypto and warned about self-dealing at their exchanges. Why then did he not investigate FTX then? Even the Ripple CEO, Brad Garlinghouse, commented on the same matter, saying that it's ridiculous and frankly shameful that Chairman Gensler was touting the SEC's enforcement actions as the cop on the beat, yet, per the public reports, he met with SBF multiple times and still claims he was caught completely flat-footed when the alleged fraud saga finally came to light. As always, welcome back to Moneyside, your favorite crypto news channel. If you're new here, welcome to the XRP Army. Hit that subscribe button and turn on notifications so you don't miss out on our daily crypto news updates. In more interesting news today, we've got an update from Inside R3. He shared a clip from CordaCon 2022. Charlie Berman from Agora DCM highlights why it's so important for new software companies in the distributed ledger technology space to work with regulators from the very beginning of their journey. As we all know, a good example of this has to be Ripple. Ripple has been working with the SEC to make sure that there's regulatory clarity in the space. While 99% of cryptos fail, Ripple might be the last man standing. Listen in.
We're not a venue, we're not a marketplace, we're not an MTF. Why are we regulated? Well, the reason is that because we're involved in communicating information about transactions, given the way that the regulations are written, it's possible that what we do is captured by that regulation. And so we took the advice with our lawyers, and we're advised by Linklaters, that to make sure that we weren't falling foul of regulation, as a software company, we had to get regulated, which is pretty extraordinary, really, given that and so we now have a license. Technically, we can arrange a transaction. We don't intend to do that, but we have to cover ourselves to do it. So again, as for anybody who's thinking of starting a business in this sphere, the process of becoming FCA regulated is incredibly complicated. It's very expensive, and it imposes on you all sorts of ongoing regulations, reporting, and whatever else that you have to do. But that is a price of being a part of these markets.
We have more updates from 801 XRP. The FDIC chairman, Martin J. Grunberg, speaks on payment system stablecoins. Payment stablecoins would be safer if transacted on permission ledger systems with a robust governance and compliance mechanism. The XRP ledger could help here. After all, XRP is the standard. He further said that studies for design features to provide incentives for greater participating for unbanked or underbanked households, questions on those lacking internet connectivity. If there's a payment system already developed, it must be designed to complement the Federal Reserve's FedNow system at a potential U.S. CBDC. At this point, there's no doubt at all. XRP Ledger, we up next.
And third, payment stablecoins would be safer if they were transacted on permissioned ledger systems with a robust governance and compliance mechanism. The ability to know all the parties, including nodes and validators, that are engaging in payment stablecoin activities is critical to ensuring compliance with anti-money laundering and countering the financing of terrorism regulations, and deterring sanction evasion. The U.S. Department of the Treasury Action Plan to address illicit financing risks of digital assets is a helpful step in addressing those risks. While these three features would make payment stablecoins safer, there remain several important policy considerations that should be taken into account when examining the benefits and the risks associated with payment stablecoins. The development of a payment stablecoin could fundamentally alter the landscape of banking. Economies of scale associated with payment stablecoins could lead to further consolidation in the banking system or disintermediation of traditional banks. And the network effects associated with payment stablecoins could alter the manner in which credit is extended within the banking system, for example, by facilitating greater use of Fintech and non-bank lending, and possibly leading to forms of credit disintermediation that could harm the viability of many U.S. banks and potentially create a foundation for a new type of shadow banking. This in turn raises important policy questions. For example, should non-banks be allowed to offer stablecoins, or should the issuance of payment stablecoins be limited to banks and prudentially regulated bank subsidiaries, agencies? Finally, there may be benefits associated with a payment stablecoin, especially to the extent that it fosters an inclusive real-time payment system. However, as I indicated, there are important risks and policy concerns that will need to be taken into consideration before a payment stablecoin system is developed. And to the extent that a payment stablecoin system is developed, it should be designed in a manner that complements the Federal Reserve's FedNow system and the potential future development of a U.S. central bank digital currency. Those are my thoughts for today.
And now as we wind down on today's video, we've got an update from XRP, familiar talking point by Nami Prinz. Sounds a lot like Ripple and XRP. If you have been questioning if Ripple and XRP have a future, it's time you hear it again. Ripple might in fact topple Bitcoin and Ethereum soon. With how things are going, we will see massive profits. Based on the recent market shenanigans, Ripple is without a doubt dominating the crypto space.
We're also about to see massive changes in the $23 trillion world of big finance. In the months ahead, central banks around the world are planning to go digital. Many of the legacy banks you've heard of, where you probably even keep your money, like Bank of America, Chase, Citi, Wells Fargo, they're about to be reset, overhauled by a new type of technology called Fintech, which is short for financial technology.
Yeah, can I ask you, what exactly does that mean for the banks and all of us, you and me?
Essentially, it means the function of our banks is about to change. They probably won't raise public suspicion about it by changing the signs on your bank's branches, but according to my sources, the Federal Reserve will soon own all the banks, and your local branch, it's simply going to be like a licensee of the Fed. In other words, the banking infrastructure is being rebuilt from the ground up, and very few Americans are aware this is even happening. We are right on the verge of a once-in-a-generation opportunity to profit by investing in the companies that are building out the architecture for this massive shift. Put simply, financial technology is revolutionizing the $23 trillion old guard banking industry. You see, over the past 3 years, while the total value of U.S. bank stocks has slid by 30%, the total value of fintech stocks has increased by 272%. This chart shows the early stages of this huge distortion in action.
It's amazing. Why don't we hear about this shift in the news? I mean, this seems to me like it should be a front page story.
I totally agree. But yeah, I got to remember, the central banks and the folks on Wall Street, they want to keep this transformation under wraps for as long as they possibly can.
So they can get in front of it first.
Of course. And to avoid panic. This reset will be a huge shock when Americans catch on. That's why the average person won't hear a word about the story until it's obvious to just about everyone. And by then, it's going to be too late.
Yeah, the profits will be gone.
Right, the same way it works with any world-changing investment story. That's why if you're going to invest, I'd recommend you do it right now, today. And I found a small company at the center of it all. They're building the bridge between the legacy banking.
As always, please do your own research and always trade safely, guys. Please keep in mind we're not a licensed financial advisor. All videos on this channel are intended for entertainment purposes only. You can always let us know what you think in the comment section below and start up a conversation. Thanks as always for watching. Couldn't be here without you. Don't forget to like this video and please click on that subscribe button below and turn on notifications. That way you'll get informed whenever we post our amazing content. Thanks again, and we will see you on the next Money Side.